Well, thank you very much. And let me start with by taking you back in time to 12 years ago and to Côte d'Ivoire. That was a country that looked like the most stable country of West Africa. I was at the time working in Société Générale, and I was writing information memorandum for private financing in that country, and saying that it was the country that had been stable for so many years that it was okay to put Société Générale's money into that country for big projects that they were undertaking at the same time. And it was not only my bank, but there were a number of banks that were quoting at the same time Côte d'Ivoire. Now, 12 years later, this country just emerges from one of the major civil crises that it has been that any country could have gone through. And the country is trying to recover and rebuild. And we'll hear a bit later at lunch from the Prime Minister. But what I can tell you is that one of their big objectives is to reconstruct and to accelerate the construction of the infrastructure. And they will not be able to do that only on taxpayers' money. They will need to bring private financing. But private financing will not come unless there is political risk insurance. And that's why MIGA was created in 1988. MIGA is there with one single purpose, which is to allow investors to come by taking away some of the concerns they may have around the breach of contract by governments of their own obligations, war and civil disturbance, fear of expropriation. These are all fears which prevent investors from going into countries, or if they go, they price it very high. So MIGA went back in Côte d'Ivoire 2 years ago, provided $750 million of guarantee to that country, mobilizing $2.3 billion of investment just over the last 2 years. And the country was not only interested in seeing these investments happen, they were interested in the signal that was given to the citizens about stability that these projects were about. Power, the Azito power plant, the third bridge of Abidjan, the gas development of Foxtrot, these were all the visible projects. You ask any citizen in Abidjan what is really the big project that they think is happening right now in their country, they will mention one or several of these. That's where MIGA was. Now, why can MIGA do that? And MIGA can do that for one simple reason. Its loss ratio is very, very low. And why is it low? Because we are part of the World Bank Group. So that means that at times of difficulties between the private sector and the government, and that always happens in the life of a PPP. We've heard earlier about the difficulties of PPPs. Then the leverage that the World Bank has on countries and the good relation, the strong relation, the policy influence that we have is going to help mediate, bring the parties to the table and avoid that the project goes to a catastrophic end. In the whole history of MIGA, we did about 700 projects. Only in 2 cases did we not succeed in getting the parties together when problems occurred. And problems occurred in more than 100 cases of the 700 that I mentioned. Africa, for MIGA, is big. Last year, it was 2/3 of our new commitments were in Africa. And when you ask where were they were mostly in infrastructure. Infrastructure is the name of the game right now in Africa. That's where investors want to go, and that's where MIGA's instruments are the most useful. So it's useful not only for the countries, because they want to get a supplement to whatever they get from donors, and they want to limit how much taxpayers' money, how much they use of their own resources for this infrastructure. So they want the private sector in, and it's very important also for the investors who want to get the returns that they find in Africa. I should say that within infrastructure, energy has been big, and responding to your question about regional projects, there were a number of regional projects where MIGA was able to help. For example, the West Africa gas pipeline was done with MIGA guarantee. The Mozambique-South Africa gas pipeline was also done with MIGA guarantee. Very often they're an off-taker, but sometimes the place where the project is located is of worry to the investors. We can take away the political risk of the place where the project is located in order to make that happen. So if you have hydro power projects which are happening in 3 countries at the same time in East Africa, this is where the MIGA guarantee can be helpful. When people are going to start thinking about INGA, everyone talks about INGA, MIGA will be deployed as a way to go. I should add that for MIGA, fragility, conflict countries are a big area of increase. Last year, 40% of our new commitments were in post-conflict countries and fragile countries. $1.2 billion of new guarantees were in those countries. So when Liberia, we were talking about Liberia, when we're going to talk about Sierra Leone, when we're going to talk about some of the difficult countries which find it complicated to attract private financing, MIGA will be key. So there is a new product now in MIGA that is also going to be very helpful for the countries. It's called the non-honoring of sovereign financial obligation. What we can do now in MIGA is going to be very important to countries to know, is that if they take a loan for a project, a public project, then we can guarantee that private loan against default. And because MIGA is an implied AAA, it gets them much better terms than what they could get otherwise. Angola just did a power plant, $500 million. It completed the Kabambe hydropower project. That was done with a MIGA guarantee, $500 million. So this is allowing the country to get borrowing at more than 13 years, I think, or 15 years, very long periods, and at terms they couldn't obtain on their own. All of you know how banks are right now so conservative about lending to developing countries. With a MIGA guarantee, they can. So it makes a big difference. Finally, we work very much with all these partners, IFC, others, and you are going to see us together. So I'll stop here, but just think about MIGA at the confluence of the desire of countries to get the investments and of investors to get the returns.
Doing business in Africa, you can't afford to be without Africa Investor.